All right, what's up, team? Welcome back to High Performance Trader. Today we're going to break down moving averages. Moving averages are a complete game changer. Hold up, let me turn on the light. See, moving averages have completely changed the game for me. Now, I've done so much data collection. I've studied like crazy. And I've started to learn a couple, two, three things about these moving averages. And it's my goal today to give you the principles and understandings that I have and how I use them. Moving averages are a complete game changer because they give us a standard, right? So before I was a day trader, I worked in a test and measurement lab where I tested radio frequency devices, components like antennas, jumper cables, etc. And to do this properly, you need a standard, right? And basically, we've talked about it before, but a standard is a basic requirement or a base level measurement, right? That's a standard, right? A spec, a familiar measurement on whether it's a device, a component, an antenna, or the stock market, right? Because price moves, and when it moves, the moving averages also move. Now, why is awesome? Well, as a day trader, hold on, let me just do this. I can't multitask for shite. As a day trader, we need to spot familiarities, right? We need to be able to look at a chart and go, oh, that's familiar. Or look at a chart and go, no, that's not familiar. You guys heard me talk about it before. We need to learn to spot healthy trends and unhealthy trends, right? This is very important because if you can learn to spot and understand what that healthy standard looks like, you're going to have way more confidence getting in the trade, right? You're going to be able to understand who's actually in control. And number three is my most favorite part, is you're not going to chase bad setups, right? So look at your journal, and maybe you're, a great trader. Maybe you're still trying to obtain consistency. Maybe you're just starting out, right? And I want you to look at your trading journal, which means look at your past 10 to 20 trades. And I want you to gather all your losing trades and find one thing in common. And one thing you're going to realize is a lot of your losing trades are a result of chasing bad setups, forcing setups, right? Letting external factors cause you to rush into the market, etc. Right? So today in this video, the goal is to really get you familiar with how I use moving averages, how they keep me from taking bad setups, how they keep me holding trades, and number three, how they help me spot phenomenal opportunity, right? So the days we're going to be talking about is today, which was 12/2/2025, and then 12/11. 12/11 was a really good day. I took two trades this day, capitalized on I longed the market and got stomped out initially, and then I took a beautiful short play here and captured a phenomenal move once again by using the moving averages, right? So first thing I'm going to do, we're going to run over that day. First thing I'm going to do is point out end of day. End of day is the closing price. It's a pit number, right? And once again, anybody watching this, and if you take value from this, make sure you hit a like and subscribe. Click the links below and check out HVT's offers. All right, so I'm going to whip out the Discord here, and I'm going to go to daily. I'm going to hide that, and then I'm going to go to daily recap. So once again, the first day we're talking about here is February 12th, or I'm sorry, February 11th. I was 1 for 2. I had one win, one loss. Now, my first initial long play was a phenomenal trade. It met all my requirements. I followed process perfectly. Ended up taking a loss. We took the trade 5 minutes before news. I'd take it again tomorrow. It was a phenomenal setup. Buyers were showing immense strength off open print. It was beautiful. I'd take it again, but it was a loss. So be it. The second trade was the short play off end of day, right? And this trade had no RBI, had no GBI. It really didn't even have a moving average cross. And I'm going to show you the tool I used to identify this opportunity, right? So this trade, we cleared over 105%. First trade, we lost about $230 on. We ended up $735 on the day. So this trade, I bought the contracts for around like $870, sold them for almost $1,000. It was a very good trade, very simple trade. And I'm going to show you how I use those moving averages on the larger time frame, right? Think about it. Principles govern the universe. We always talk about this, right? Principles, principles, principles. What's a principle? Well, the law of averages. That's a principle. That states out of a large data set, you will identify a pattern, right? That's the law of averages. Out of 10, we get 7 when we're trading our edge. That's the law of averages, right? Very simple. Been around since time immemorial, right? So a new principle that I've identified, I've gotten very clear with, is the principle of moving average extensions, right? And this is a very simple concept, right? Now, a lot of people use a lot of different moving averages. Some people use the 9. Some people use the 10, the 11, the 12. I don't care what you use because it doesn't matter what moving average you use. Once again, what matters is your understanding of it, right? So once again, I used to work in the test and measurement lab, and unless our standard way of testing, right, unless we had a standard that we can calibrate to, right, that was our base measurement, right, unless and until we had that, we couldn't accumulate data that we could actually rely on. And what that means is, until I know what good looks like, I don't know what bad looks like. Very simple way to understand this. Until I know what a healthy trend looks like, I won't know what a bad trend looks like, right? And a lot of people are going to be like, dude, what's this dude talking about? What's healthy, unhealthy, right? And I'm going to show you how we identified an unhealthy trend on the 1 hour time frame, and that led us to capturing that beautiful short play. So if I whip out TLS over here, you guys are going to see I'm going to whip out that 1 hour time frame. Once again, the day I'm talking about today, this is 2/11/2025, right? So once again, we took that morning long play, got stomped out of the play. So be it. What up, Todd? So in the end of day, right? Check this out. We are very extended, and we're coming into EOD, right? Super extended. So back to what we were talking about. We have to understand what good looks like and what bad looks like, right? So what does good look like, right? Well, a good healthy trend means no extension. Pretty much every trader knows anytime price gets extended from the moving average, you can anticipate a reversal. Now, let me show you what I put in the Discord here to help everybody realize what it was I was seeing. So give me a minute here. Okay. So yesterday at 11:08 a.m., you're going to see here, I posted this is in the Discord, right? We're extremely extended from the 9D EMA. So the moving averages that I use is the 9 double exponential moving average, right? This is the DEMA. We call it the DEMA over here at HBT. And then obviously I use the 50 in the EMA cloud. All of these moving averages have standards. They have a standard way of moving. We use this standard to identify opportunity. Is what you're looking at in front of you a standard? Absolutely not. This is unhealthy. Why? Because we have a large gap in between current price, and the moving average. This is what we call opportunity. If and when we can learn to spot this, we will always, right? Because think about it. If we're extended on the 1 hour, what does that mean? That means on a smaller time frame, we are either going to get chop or price is going to retrace or reverse back into the moving average. Both scenarios, I don't want to trade continuations with. If I'm getting chop, I don't want to trade whatsoever. And if I'm getting a reversal, I'm going to want to short the market back down into the moving average. And that's exactly what we were looking at, right? Once I put that, I put massive extension, high probability of chop and or reversal, eye on entry here. waiting for entry candle, holding off. Matter of fact, I like shorts here, right? So once again, we're ripping in the end of day. We're continuously getting higher lows, and we're almost there to take the market short, targeting open print. So if I swing over here to SPY alerts, you're going to see we took the market short here. Where is it? At 11:51 a.m. Right? We're coming into the market. We rejected. Once again, we're playing the 1 hour moving average. We understand the principle. We understand the standard. Therefore, when we identify that extension, I see opportunity, right? So we took the market short right there, and we caught a beautiful move down. You can see here, I'm updating. Got in the market up there at 606. What is that? 60.66. And we're taking the market all the way down, and we're targeting open print, right? So once again, this was a beautiful move to the downside. And also notice here, this is going to be my next principle I talk about, right? The GBI and the RBI. Why is the GBI and RBI important? Well, number one, when we see it, we can identify risk. But number two, what does it mean if we are not getting an RBI or a GBI, right? Considering the RBI and the GBI is the standard, and that symbolizes a healthy trend, like we're getting here, right? Look, rally, red bar ignored. Rally, extended from the moving average, sucked back, right? So once again, we understand extensions. Number two is understanding the RBI and GBI. If and when you get an RBI or GBI, my friend, you have a healthy trend. If and when you don't get an RBI or GBI, my friend, you do not have a healthy trend, and therefore you do not want to trade continuation. You then want to look for reversals. Let me show you. So the trade we took today, I'm going to come over to the disc, right, so I can show you guys. I very rarely do I trade like this because I'm accumulating more data on the topic. But I really didn't. I'm going to be trading a lot more like this because it's very, once again, once you understand the principle, you can't unsee it, right? Once you understand the principle, you can't unsee the principle. Price rips in the previous day low this morning, and we sell off. We don't just sell off. Look how we sold off. We get no green bar ignored. We're just getting red candles, red candles, red candles. Now, how many times have you been seeing red candles and you felt the urge to hop into the trade, chase the trade, FOMO was settling in? What if I told you every time you're not getting an entry candle, it's actually a higher probability that price is going to reverse on you? Think about all the times you decided to get in a short play and you chased it and you ended up getting smoked or stomped out or forced out of your trade, right? We call that trapped selling in this scenario, right? And I know this because I wanted to enter in the market short. I literally wanted to get in this short play, right? Price was selling off. I wanted to get in it. I didn't want to miss it, but I had no entry candle. And once again, just like I just told you, if you're not getting a red bar or green bar ignored, the trend is unhealthy. So we're selling off. I'm trying to get in it, but I'm not getting my entry criteria. So then I go, okay, we have a critical level here off open print. What if I go long? So that's exactly where we took the market long. Price came into open print. I took it long at the 1030 candle, this candle right here. Why? Because we lost. It was no longer a healthy trend to the downside. We lost all healthiness when the market decided not to give us a GBI. So once again, using moving averages to identify the standard. What's the standard? A healthy trend. And when I don't see a healthy trend, A, don't trade, or B, identify the reversal and capitalize on it with low risk. Right? So these are just two principles that I use. Extensions in RBI and GBIs, right? They work on all time frames. So once again, we're day traders. So tailor it to serve your needs. If you're a day trader, does it make sense to watch the 1 hour time frame? Absolutely. What if you spot an extension on the 1 hour time frame, just like we were talking about? that means that maybe you should start looking to either sit on your hands or B, capitalize on the reversal. It's so funny because if you've been trading for a while, these principles that we talk about, they've always been there. You're just starting to notice them, right? I stare at data constantly. I'm constantly viewing the charts. I'm constantly looking at where I can get better, where I'm bleeding cash. And if you look at your losing trades, I guarantee you, an unhealthy or healthy trend, you were trading it the wrong way. So what I propose to you is that you use these principles, do your back testing, don't just take my word, but use these principles and watch everything start to change. The biggest thing for me was no longer pacing. Like, all of us traders go through FOMO. We don't want to miss it, right? What happens when price is getting away from you? You want to get in the trade. That was literally me this morning. I wanted to get in the trade so bad, especially after I got stomped out. But I had no entry candle. Price rallied on me. Price rallied up. And then right here, and I want to get in the short play. I want to short the market, but I have no RBI or GBI. I don't just have this rule because it not only doesn't work, but the rule doesn't only work, but if you can flip your understanding of price action and go, hey, the RBI or GBI is not there. It's not there for a reason. How can I still capitalize on this? Right? So it was a phenomenal trade. I sold way too early. I sold up here at previous day low. Still got in right here around 600. Sold at 642 or 602.42 here. Cleared over 60%. Once again, using the moving average principles. Right? So that wraps it up for today, guys. I appreciate you guys coming. Once again, these principles really helped change my life. Send this to somebody that needs it. These principles don't just help you identify great trades, but they keep you away from the bad ones, right? So I love you guys. Let's finish this week strong. We're trading live Friday. I will see you there.